Well, hi folks, Stratman here from Pitware. Just going over the trades from the last session, trading opportunities. At the moment, we've gone right back to basics and we're just looking at trading with the trend. This comes from lesson 1 of my set of video lessons. So last session, this is the end of New York yesterday. This is the end of New York today. This is what's transpired. Now, if you had have traded with the trend, which is basically, which way your slower, faster moving average has crossed the slower moving average and prices above both moving averages. If you had started way down here at the beginning of the day, I mean, the potential here is huge. I mean, if you had traded most of that session, you could have almost realized 200 pips, but it's unlikely you would have stayed in all that way. You might have pulled out at this first one here at about 30 pips. Your next opportunity is this one. Might have got about 40 pips. You might have been tempted to get into this one for another 20 pips. This one here is just a little bit far out, but it's definitely a pullback, so you could have got 10 pips. There's one here, just depending where you got in. You might have taken a 40 pip there, or you might have even gone further and taken an 80 pip. Or even further and taken almost 100 pips. This one here, well, quite obviously, if you had taken trades here, we had a pullback right up to here, but we didn't get a cross of kind of like, a break of this kind of like pseudo trend line here until about here. So if you had gone along here, you would have got stopped out, but you would have been only looking to have about a 15 to 20 pip stop, and if price was reversing on me like that, I'd be out anyway at about 10 pips. Next trade is just here, so price has come up, it dodged up and down here, so you when price came up to this point, you might have gone along right here, and you would have got a stop of about 12-15 pips there. But then entered here and made up for any losses, and there's an 80 pip move there. So all in all, pretty good trading. So if I just zoom in a little bit and I look at exactly what trade I took, so I entered on this candle here, and what I was looking for was that price had come back and retested had pulled back to our moving average, and if I draw a kind of like an imaginary trend line down there, I'm looking for price to bounce off here and kind of like break this kind of area here. We're going to add fractals to our strategy later, and that will help you understand when the best opportunities are. But for me, I got in at about this candle here, and actually I entered a bit earlier and got stopped out for 2 pips, but I wasn't too worried. But here I entered right here at 1.2513153 there, so I entered on that candle right at that point there. So, and it pulled back on me this far, and it pulled back to here. So what kind of distance is that? I mean about 15 pips. So I did get a pullback of 15 pips, but it didn't cross this line here, so I thought I'd just stay in there. It's looking good. It's a good trend line up. Okay, so and then I got out of this trade up in just about here actually. Now I got out here because I was kind of finishing up, and what was that? That was about 2586. So it was kind of like back here. So I got out a pretty short distance on this trade, just on this kind of first move. So I think in all I made about 23 pips, which is about right. And then just after I got out, price continued on, and I missed out on this move here. But hey, who cares? I did a good trade, positive trade, no problem. Some people might have got back into the trade just here. Next trading was on the pound, I'll just zoom out a little bit and just see how price action has been for the session. It was quite hairy for the start. The whole start was just quite messy, and there really wasn't a good trading opportunity till about here. So, and what I mean by that is that if I drew a line across here, it's quite clear that, you know, until it's broken there, if we'd got price action to here, a break of this is definitely getting into the trade. Now, there are places where you might have got into the trade, like we had a pullback here and it broke through here, so you could have entered here. And in fact, what we'll do is we'll zoom in just to make it a bit clearer for you. So you may have entered, because this is a pullback, came through and it broke through here, so you might have entered just on here. You could have realized a maximum of about 10 pips, and then as soon as you saw price turning around and coming back, and as soon as it breaks through here, you'd be out. And I mean, you should have only lost about 1 or 2 pips if that happened to you. Then you'd be waiting for the next move forward. You might have entered here, because if we draw a line down through there, it's kind of broken the line, so you might enter here again. Again, like 5 pips, you might have got stopped out. So as soon as you see it coming back down, you stopped out. You might have entered here again. But what we're doing is we're making sure that we only trade at the right time. Now, the reason that I possibly wouldn't have done all that is because, look, the line is flat here. There is slight bias here, but it's getting flatter and flatter here. So it probably, we're getting into a range bound area, and a smarter, more experienced trader would have realized that this is becoming a little bit range bound right here. Consolidation, and so a trending type strategy like the one we're using right now is probably not going to work that well. So we really need to see trends starting to move up. Now, when we got a clear break of this, that was the ideal time to enter. So I didn't enter any pound trades until this occurred. So an aggressive trader might have traded long right on this dip, even though some people would have said, oh, it's breaking out low, it's sell here. An aggressive trader that's using this strategy might have bought at this point, and they would have got a significant move. So for me, where did I get into this? I got in at about 736, 1.508. 1.508. So I got in right there. As soon as I saw this big power move coming up and hitting that line, I just jumped in. Okay, I had quite a small stop. The stop would have been down to below that line. I usually have a 20 pip as my kind of sitting stop in case things go drastically wrong, I lose connection or whatever, but generally I would have pulled this out if I had to come back to here. So just keep our losses small, our gains large. So I entered just on that break of that line there, and I exited at about 840, 1.51. 840. So in this candle, 1.5139. 39. So I exited way up here on the top of this candle. Okay, so that's my trade was from there down to about there, and it was 55 pips that trade. So and it didn't go against me much at all. It just carried on. I took my stop to break even as it came up here. The other thing is that we were discussing on the thread, people were talking about going long again when price was up at this candle just here, and I said, looking at the dashboard down here, we looked at the average daily range at that time, and it had done about, you know, close to within 20 pips of the previous few days. So to me, I suggested to people, for the reason of this is the daily range is almost done, I'm probably not going to enter long here. There's not much opportunity, and it was correct. There wasn't much opportunity. The other thing was the distance to the moving average. I mean, the distance to the moving average at that point in time was 70 pips. Another reason, you know, price doesn't do it that often. The other big reason was that the last low fractal was down here, and on the dashboard, the fractal area just here was telling me that the distance here was huge. It was, we'd gone all the way up to just over 100 pips. That doesn't happen often. Anyway, hope that was helpful for you guys. We'll catch you on the next video.